Welcome to e-Adhyayan Commerce. Today we will understand accounts. Now accounts, that any sort of accounting transactions involve accounts. Accounts holds all the related information related to financial transactions. Now if we see that there are three types of accounts that we know. The first is personal account. Next one is real account, and the third one is nominal account. So there are three types of accounts that we know: personal account, real account, and nominal account. Now we'll try to understand each of them one by one. Now you see, in personal accounts, it deals with all the transactions that a business does with any other individuals, firms, corporations, or group of individuals having specific types of transactions. Now, if we segregate the personal accounts, okay, number 1, number 2, and number 3 parts, or 3 types of personal accounts that we know. The first one is natural, the second one is artificial, and the third one is representative. So the natural personal accounts belongs to the individuals, like living individuals. This belongs to living individuals. Like if we are giving an example for this, that would be suppliers. The suppliers of a business. Suppliers of a business, or the creditors. Yes, creditors would be a good example. Creditors of the business. Okay, the living individuals. Now we come to the artificial. Now artificial means legal entities. Legal entities that are involved in doing business. That is legal entities. Now if we have to give an example of legal entities, that would be any sort of bank, and if you are having a transactions with any government, state or the central government, say government of India, government of India, that would fall under artificial group. And now if we see the representative, what is representative? That there are certain group within the organization or affiliate to it that have a specific type of transactions, like first of all I write this, the group of individuals is a group of individuals having specific type of transaction. The group of individuals having specific type of transactions, like if giving an example for this, let's say outstanding salaries, that there are a group of like 8 people who are due by the salary of the month. So there is outstanding salaries group. Okay, outstanding salaries. So these are the three types of accounts that we can see under the head of the personal accounts. Okay, now the golden rule that you need to learn about this personal account, the golden rule that will help us to do any sort of journals. Okay, the golden rule the golden rule of personal account. The golden rule is debit the receiver, that whoever receives will be debited, and credit the so debit the receiver, credit the giver or payer. Now we have to see an example to understand this. Say paid rupees 800 to Mr. Shyam. Okay, the business has paid rupees 800 to Mr. Shyam. So now from the aspect of the business that you are having, that Shyam is receiving, you see, debit the receiver. So Shyam account debited by rupees 800, and you are paying it, so it goes out of your cash box, that is 800. Okay, so we have to understand that receiver debited, payer credited. That's how the personal account goes. And one more important thing in this, that the personal accounts are not closed. Okay, they are carried forward in the next year. Okay, now that is personal account. Now we move on to the next account, that is real account. Real accounts is all the assets and liabilities of a business. That all sorts of assets that you are having, they can be tangible in nature or intangible in nature. All sorts of assets and the liabilities that you are having. We'll also segregate this real account in two parts. The first one is tangible, as I have said, tangible account, and the second one is intangible. You see, tangible accounts are very easy to understand, that you can observe them through your senses, that you can see them, feel them. Definitely so, they are observed through senses. That the senses, you'll be able to observe them. And there are intangible accounts that you are not going to be able to see by your eyes, or you can feel them, but they exist. Okay, can't be observed. Definitely cannot be observed by senses. Definitely can't be observed by senses, but has a monetary value. That it has a monetary value. Now if we see that there are if you can see that the example of this, the example would be furniture. Like definitely, for starters, we always deal with this furniture. Then we can say land. Okay, any sorts of things that we can say building. And if we are talking about the intangible, we can say the patent, then goodwill. They are good examples of intangible and tangible. So this goes your real account. Now the golden rule of real account that we will see. Debit what comes in. So that is coming in is debited. Credit what goes out. So if a thing is going out of your organization, that is the credit. Now if you are seeing, if we see an example of it, bought land for rupees 2 lakh. A land has been bought for rupees 2 lakh. So if we see that land, that we are acquiring it, okay, so it comes in. So if it is coming in, it is being debited. So excuse me, so if you see, land account is being debited for rupees 2 lakhs, and again you are paying something, let's say from the bank. That's a hefty amount to pay by cash, so that's bank to bank account, that would be okay. So this goes the golden rule of real account. Now again, real accounts, unlike the other accounts, they stay until the very end of the organization. So they always say these accounts are not closed. Instead, that we show the balances at the end of the year in the balance sheet. Okay, in the balance sheet we show the real value of it at the end of the year. So this goes about real account. Nominal accounts are those accounts that deals with the incomes, losses, gains, expenses that you do in a specific accounting period. So incomes that are made, expenses that you have done, okay, losses that you have incurred, as well as the gains, okay, that you have. These are the things that we look for in a nominal account. Okay, you see, nominal accounts, these accounts, okay, first the golden rule. The golden rule of the nominal account is that all the expenses made, expenses that are made, and expenses and losses, that all the expenses and losses are debited. Expenses and losses are debited. And all the incomes and gains are credited. Okay. Now we will gonna see this with an example. Okay. For a year, there are employees in the organization and you have to pay them. So salaries. Okay. So salary of employees rupees, say 40,000 paid. Rupees 40,000 salaries has been paid. Now you see that you are paying the salary from your bank account. So you are making an expense. So whenever you are making an expense here from the bank account, that should be debited. Okay. So bank account, from where we are making the transaction, bank account has been debited because we are incurring an expense of rupees 40,000, and the receiving, okay, that whoever is receiving in the credited part, that would be the salaries. Salaries account that has been credited by rupees 40,000. These are the accounts that after the end of a specific financial year or specific financial period, these balances are then transferred to the capital account at the end of a specific financial period. So this goes our accounts, okay, that the very important instrument of doing accounting. Okay, I hope I have helped you understanding account in a better way. I hope to meet you soon in the next video. Thank you.